This was probably one of, if not the craziest days that I have ever seen in the stock market here. There is so much information that we need to cover in this video, guys. So make sure you guys sit back, relax, buckle up. We're going to go over everything that happened today. And just when you thought everything was over, there is a sleeper catalyst that is happening tomorrow that you guys need to be aware of because the volatility is not over. Like I said in a couple of videos and live streams over the past couple of days, yesterday when the Fed minutes came out, that's when all of the volatility and crazy things were going to start. We have about a 2 or 3 week runway where things are going to be incredibly volatile. I'm super excited. There's a lot of money to be made. But before we get into all of that information, guys, if you do enjoy the information and analysis that I provide for you guys in these videos, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So let's get right into the charts here and go over a little bit of what happened today with the overall market here. So the first thing that we need to go over is this very weird looking candle after the CPI data came in a little bit hot. Remember, the expectation was around about 8.1%, and the CPI data came in at about 8.2. Now, we saw a sell-off to about 347, 348, and then we absolutely rallied. Now, what might be the reason for this? Well, if you have been watching the market over the last couple of months, well, we called this top here right around 430, and then we saw this very significant sell-off. If you're short the market going down to these lower levels here, it makes sense that after this drastic drop that we see here on this 5-minute time frame, that you might be getting out of some of these short positions, and we're seeing a lot of short covering happening today. Now, this doesn't necessarily mean that it's a squeeze, but they are getting out of their positions and potentially trying to reestablish their shorts at some higher levels. Now, going into this chart right here too, this is painting a very interesting picture here. And again, when we look at news, it can give us a little bit of a bias into where the market could go. But at the end of the day, all you have to do is really follow the chart. If you were holding any puts into today, you printed. But there was a lot of money to be made on this cross up here, the closing candles above the 200 EMA, and these nasty monster candles going up. Again, guys, if you do want to come to the best place to come and learn how to trade, make sure you check out that link down below. The trading algorithms, killing it. Our community is growing super fast, and you guys really should see the amount of success that our people are having. It is unbelievable. So if you guys are interested in this, make sure you check out that link down below. But let's get into some more of the important things that are happening in this market here. The dollar slipped lower today. The 10-year treasury up. The 2-year treasury up. Now, the one thing that I want everybody to really pay attention to here is the British pound, or the pound, and these 30-year gilts from the UK. We're going to get into this a little bit later, but this is the second to last day that we're seeing the UK and the Bank of England enacting these quantitative easing policies by going out and buying bonds. Now, again, yesterday we saw that rally up almost towards that key level up here, the level that these yields were at before we started that quantitative easing, and they sold off again today. Now, speaking a little bit further before we get into this UK situation, because it is incredibly important for going into tomorrow, we have to take a little bit of a look at what's going on with CPI and the overall macroeconomic situation here. Remember, we are not even close to out of the woods yet. If you think that this rally up is investors thinking that everything is fine, you are sadly mistaken. Consumer inflation expected to have run hot in September, boosted by rent. This was an expectation that came out yesterday, and we actually saw some of those things happen. Rent prices are going up. Now, here is the problem with rent prices continuing to go up and adding it into that inflationary pressure. Remember, most of these rents are going to be on a little bit of longer time frames, so you're not going to see the initial reaction of higher rents in CPI. It takes time, or it can be called a lagging indicator. The other problem that you have is that when the Fed raises interest rates, you see the cost of mortgages go up, the mortgage rates are going up, and home prices are falling, and it makes it more expensive for people to get their hands on homes that they could have afforded previously at lower rates. So what do? They rent. So the problem is, and the catch-22 with this inflation situation is that not only do we have inflationary pressures coming from the energy market, but as housing starts to freak out a little bit more going into the end of this year and the beginning of next year, you're going to see a lot of people forego the opportunity to go and buy a home and go back into the renters market. But what that does is create a lot of demand. So you could see rents go up even more, further adding to the inflationary pressures on our market. Now, how would you actually solve that? Well, you would actually solve that by lowering rates, but then that's going to add more inflationary pressure to the market anyway. So the Fed is in a very, very tricky situation here, and that's why people are calling it a soft landing. They need to execute on all of these different policies so perfectly in order to not have one of these different aspects fall out of whack and really start to skyrocket. Rents are going to be something that you guys need to keep an eye on going into the next couple of quarters, because that could be kind of the sleeper catalyst here, not the one that we're going to talk about tomorrow, but the sleeper catalyst that really kind of handcuffs the Fed, and they're not really able to do anything about these inflationary pressures. Now, what we also have to talk about here, and this is probably the most important catalyst going into tomorrow besides bank earnings. Remember, a lot of the banks are going to be reporting tomorrow. We have JP Morgan, I believe Citigroup, Wells Fargo. A lot of these large banking institutions are going to be reporting their earnings. And in these earnings, we're going to get essentially economic outlooks going into the next couple of quarters. If these economic outlooks are not good, well, then we could see the market sell off based on that news or guidance. And we could also see them actually miss earnings, and we see the market sell off based on that. So we have bank earnings tomorrow morning, but we also have this situation going on right now in the UK. So circling back to some of the things that we were talking about a little bit earlier, remember, I believe Truss, Liz Truss, is thinking about a new tax policy U-turn. Remember, she wanted to come out and decrease taxes. That caused the pound to decrease, the yields on the UK gilts to skyrocket, and those pension funds over in the UK to face very, very significant margin calls. But this is the rumor that is circulating right now. We went through that quantitative easing period. We know it's about to end, and they need to find a situation or a solution that's going to get them out of this pickle. This tax increase that you could actually see them do could provide a little bit of a backstop to the inflationary pressures that they are seeing right now over in the UK. So British Prime Minister Liz Truss is considering reversing more of her government's controversial mini budget. Some media reported on Thursday, setting off a rally for the battered pound and British government bonds. Discussions were underway in Downing Street over whether the scrap elements of the plan, which caused turmoil in the financial markets the moment it was announced by the finance minister 3 weeks ago, Sky News said, citing sources. Now, since tomorrow is the day that the UK is going to stop buying these bonds, or the Bank of England is going to stop buying these bonds, well, they need to come up with some sort of solution. So it's very possible that over tonight and going into tomorrow, we get a little bit of an announcement of what they're planning on doing with this tax plan. If it doesn't come out tomorrow, we could see it then come out on Monday, but that's going to be something to look out for. If they don't reverse this tax plan, we're probably going to go lower, because as we've seen with the gilts here, we've seen them start to really, really rip up towards these key levels here in terms of the yields, meaning that the bonds are selling off. And if the UK and the Bank of England is not there to come in and buy these bonds up and push these yields down, well, then we could see these yields start to skyrocket, putting even more pressure on pension funds and the British pound. So if that happens, markets are probably going to sell off. And again, these are things that you guys need to be aware of going into tomorrow, because nobody is talking about this right now. And again, looking over here at the target rate probabilities for our November, meaning the last I checked, it was 97%. Right now, 97.8% probability that we're going to be getting a 75 basis point rate hike in November. Remember all those people calling for a pivot, and we were sitting here saying, it doesn't really seem so likely that the Fed is going to actually be pivoting based on one key-ish data point? Well, this is what we have here. And then the terminal rate projections are even higher now. It's about 4.5 to 5% for the terminal federal funds rate. And even now we have a 2.2% chance of a 100 basis point rate hike coming in November. Are we going to get that? Probably not. 75 seems the most likely. But guys, protect yourselves. Again, I will say this again to end off this video here, that there is really no need to be a hero in this marketplace. Protect yourselves, take your quick gains, put the power of compound interest on your side, and get your money in and out of the market with your gains as fast as you can. So guys, that is going to wrap up this video here. If you did enjoy the information and analysis that I provided for you guys in this one, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening. I'll see you in the next one. Peace.